Morning, everybody. It's the 23rd of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning.
How you
Last one of the
doing?
year. Yeah, not too
Yeah,
bad.
last one. It's half day tomorrow in markets, but there won't be much to talk about, I don't think. So we'll round it up here, and yeah, last one for the year.
Excellent. Are we going to do anything different in Talking Bull, or are we going
Next year,
to?
we've certainly got some plans too. Yeah, we just need to work those out. We're going to introduce Jamie to it potentially as well,
Yeah,
our new
nice.
analyst, and yeah, maybe talk about his journey and story as a trader and analyst, and yeah, maybe incorporate some of that. So yeah, some
Coolio.
exciting plans for sure.
Excellent.
Okay, let's get stuck into the headlines. Haven't got a load of time this morning, unfortunately, but the Omicron COVID-19 variant does appear to be less likely to put patients in hospital than the Delta strain. That's according to preliminary data from a number of studies. Researchers in Scotland found Omicron was associated with 2/3 lower risk of hospitalizations compared to earlier variants. So that's good news, of course, and I think that's stirring up stocks. We've seen advances in most indices yesterday. The S&P closed on its record high, and brighter US consumer confidence data as well as home sales yesterday also boosted sentiment. Officials do remain cautious, however, about the spread of Omicron in China. The city of Xi'an was locked down to curb an outbreak, the latest escalation in the nation's efforts to extinguish local transmissions of the Delta strain. We've got Russia continuing to build up forces close to the Ukraine border, even as it's preparing for security talks with the US, keeping up pressure with a deployment that could turn into a rapid invasion or long-term threat. So this isn't something new, but does appear to be escalating. And what a time to do it, hey? Just a couple of days before Christmas. Um, Billionaires battling out on Twitter. This time it's a tussle between former Twitter boss Jack Dorsey and Silicon Valley venture capitalist Mark Anderson. Dorsey ribbed Anderson's VC firm earlier this week when he tweeted that so-called Web3 technologies, an amorphous collection of tools and ideas that backers believe could form the basis for new decentralized web, have been corrupted by investment and influence of venture capitalist firms. So that's quite interesting as well, I guess, if you're into that sort of thing. Let's get stuck into some charts, Steve. What do you want to start with today? Let's have a brief roundup to end the year.
Yeah, I'll start with Bitcoin. Really sort of, let me just make sure I'm looking at the right chart. Yeah, as I said yesterday, and to everyone's dismay, I think it's the end of the road for Bitcoin. I can see us coming back in the new year and this being a lot lower. On the daily chart, we're clearly remaining this downtrend, potential for a head and shoulders formation. Still a way to go to break the neckline, but I think if we manage to get below the 40 to 42,000 area, we should see further downside, maybe back to this 28,800. Really need to recapture the all-time highs to stave off this, and that would require at least a break of 54,000 over the coming week or so. So I'm negative on Bitcoin as we move into 2022. Crude oil. Crude oil's reacted higher and been supported. I think there's a bit more potential for upside here, but again, if you look at it, we've got a potential for a head and shoulders formation. That would lead to a break, would require a break of the $61 to $62 level, and I can't really see that anytime soon, but you never know. Definitely the level to watch is 61.50 in here. And if we manage to sort of like push above this 50-day moving average coming in at 73.77, then it does open up another assault on the upside. I think so. A little bit indifferent on that. Really not sure which way that's going to play over the coming couple of weeks. Natural gas, still a bit of an area of concern. We haven't managed to get above the $4 level. We really need to hold and close above there on a weekly basis to stop the rot in natural gas. So are we looking at a potential for this swing lower in the energy sector? Possibly. Gold, I looked at this the other day. I was selling this below 1800. I brought my stop back into 1800, and this has managed to turn it around yesterday. We were looking really bearish. We had a shooting star formation, but it all stalled on Tuesday, and Wednesday's rally yesterday has really sort of brought the resistance around about 18.15 into sight. Trading at 18.07 at the moment. Again, a break above 18.15 should retest the 18.34 level before 18.75. Upward trending support comes in today around about the 1760 level, but obviously we've got this 50-day moving average around about the 1785 to 1790, which will be the interim support for gold. Take a look at the indices markets. We'll come on to my gun to head in a minute, but we've just sort of topped out a little bit in the last, 15, 20 minutes. So since the open, we've had a bit of a reversal on the overnight uplift in the European markets anyway. So we can see FTSE's rejected on the 4-hour chart just here. Well, this closes at 10 o'clock, so it's still got an hour, but it looks like a little bit of a topping formation, quite close to the previous resistance. And obviously we've got this downward trending resistance on the daily chart, which it's stalled at. So maybe a potential offer a gun to head this morning. I've just got involved in DAX actually. When I saw this reversal on the short-term chart, I had a couple of trend lines, this from yesterday, which I was targeting this up move, which I'm quite happy about. We drew a few resistance lines, trend lines coming in here, and it picked out a sort of like a confluence of trend lines coming in around about my target for yesterday, which was 50,654.5. Just failed to get there. Well, it touched 54, but not before it closed a little bit lower at 9 o'clock. There's another trend line a little bit higher coming in at 15,723, but we look to be stalling on this 4-hour candle. If we break it down to the daily candle, you can see my trade idea from yesterday. We're forming a bearish outside candle at the moment. If we manage to get below the 15,595, then I think we could have a little bit of a swing lower. Yeah, and the sort of similar price action really. If we look at the 4-hour chart, they all seem to be stalling ever so slightly with this Ichimoku cloud resistance on the Dow, stalling at sort of previous confluence levels that we can look back at. But yeah, the momentum is stalling. Bit of bearish divergence really we're seeing on that on the shorter term time frames. Again, the same in Nasdaq. Looks like a stall, could be just setting up for a flag, so I might have egg on my face ever so shortly. Oh, this looks good as well, this Nasdaq from I don't know when. Yeah, so we've had this inverse head and shoulders which played out pretty nicely. I think we talked about this yesterday, Joe, that this might have been the trade idea I wrote in when you were sort of going short of it. Not to, do you want to bring that up really?
Yeah.
And the S&Ps as well stalling at the moment. So maybe just running out of a little bit of steam from this really nice rally that we've seen over the last few days in the indices. That's about it, Joe.
Very nice indeed. Short and sweet. So let's take a quick look at some of the FX markets then. Just going to keep it quite broad really, because there isn't a whole lot that's changed. Still trading in a bullish channel, still got in this sort of consolidation phase when it comes to dollar index. We did see a move lower yesterday, but we're seeing a bit of green today as we hold this sort of short-term uptrend as it trades within this kind of triangle pattern. If it does break to the downside, then looking for a move towards the lower end of the channel. And the 38.2% fib level at 94.47, but ultimately I'm expecting to see higher prices in dollar index. But as we approach this Christmas phase, or this funny in-between phase between Christmas and New Year, you can see markets not doing an awful lot, and if anything, just grind higher, particularly riskier assets. So that may have a detrimental effect on dollar index. Looking at euro US dollar, that continues to trade in this sort of minor consolidation pattern, this triangle that we can see on the daily chart. We haven't seen a break either way. If we do see a break to the upside, then I'd be looking for a move higher towards 115.25, break lower, and we're looking for a move down, a continuation in the way of the downtrend towards 110.58. Looking at cable, that's had a decent couple of days actually. So again, having bounced from this 38.2% fib level at 131.65, we've seen 3 consecutive up days. We're breaking through this resistance level at 133.53. The next level above that is at 134.15. Then above that, we'll be looking for a retest of the big round number at 135.00, which is probably going to come in line with this downtrend as well. So for now, it looks like we're in a bit of a corrective phase with cable. So seeing a bit of strength in sterling. And you can see if you look at some of the other currencies on the right hand side for sterling, we're up quite nicely across the board. So there does appear to be a bit of appetite for riskier assets today. Aussies had a decent push through this resistance level, big move yesterday, taking out this previous high here from the 16th of December, and looks to be in corrective mode and heading higher. So certainly seems to be increased appetite for riskier currencies as we approach Christmas. So that's again a pretty broad overview of the FX markets, and no doubt we'll take a fresh look at all these markets come the new year and start planning out what we expect for 2022. Steve, I know you're itching to talk about your gun to the head trade yesterday, which worked out really nicely indeed. So very well done there. 2 wins in a row for you. You nailed a 2.62R winner on DAX yesterday, following on from the 1.8R winner you had on gold a session previous. So nice little hot streak for you to end the week.
Lovely.
You're going to
Well,
get a
let's see
hat
if I can
trick.
follow through. Let's see. It's an open goal, mate. It's straightforward. Really, sort of like just can smash this to
Go on then.
pieces. I'm going to have a really tight stop on this, and we're going to go for it. We're going to go for little 5-to-1 risk reward. Selling DAX here. Tight stop just above the high we've just made. 15,675.5, targeting 15,465.5. Getting short here at 15,640 and a half, which I'm short at myself. So really tight stop, really just going for it today, not holding back, just saying that's it. That's the top of the market. Steve O'Hare's called it. Get on it before it's too late, I think.
Yeah, good
Or
one.
maybe some cleverer people out there might just go, what are you talking about? There's a gun to your head. You're just making it out, mate.
Yeah, well, there is some people that will say that. This is the euro dollar chart. So it's the hourly chart. Just talked about this on the daily. Trading in this kind of consolidation phase at the minute. Overall trend remains bearish. We're trading towards the top end of this triangle. If it breaks out to the upside, then we're expecting to see a correction higher. If it doesn't, then we may just continue to see it range bound in this short-term triangle. So I've drawn the same looking triangle on the hourly chart. We've just seen a rollover to the downside, a close below the 10-period moving average on the hourly. So I'm going to back further declines here in the short term. Looking to sell at 113.25, stop loss of 25 ticks, 113.50, targeting a move down to these lows, which are at 112.36. So looking for 3.6R on euro US dollar today. And those are our last trades for the year, Steve.
Yeah, nice one, mate.
Okay, data-wise today, there are a few bits out. We've got US PCE price index, durable goods orders, and initial jobless claims all coming out at 1:30 this afternoon, swiftly followed by the US new home sales at 3 p.m. and then 11:30 this evening we have Japanese CPI data. So a few bits to keep us interested. Obviously, it does appear that markets are looking to be on the front foot as a result of the less concerning issues around Omicron, which hopefully that continues to be the case. So time for us, I guess, to wish everybody a Merry Christmas and a Happy New Year, Steve.
Yes,
And
Merry Christmas, everyone.
we will be
Are we
back
going to sing? Are we going to
in
sing
January.
again?
No, I haven't really got time
We
for that.
wish you a Merry Christmas and a Happy New Year. There you go.
All right, that's
That'll
perfect,
do.
Steve.
That'll do,
What a
Donkey. I'm
wonderful
sure everyone's relieved
end.
that I'm not going to do a huge rendition. Yeah, have a good one, Joe, and look forward to seeing you in the new year.
Yeah, cheers, matey. Speak soon.
Cheers.